Wondering what the Fed is actually going to do next? Looking for a differentiated view on Nvidia and capital spending? I'm Chris Versace, and I manage TheStreet's Pro portfolio. Joining me to talk about all that on this week's Stocks and Markets podcast, where we talk about, you guessed it, all things impacting the market, is Todd Campbell.
Chris, thanks for having me on. It's been a long time. I hope we have some people that remember some of our chats from a couple of years ago, but I'm excited to get back into the saddle with you and chat a little bit about markets today.
I'm looking forward to it too, Todd. And it's funny, I was just going to say that folks who've been around as members for the Pro portfolio probably remember our past conversations, but for the newer folks, tell us a little bit about yourself, Todd, your investment background, if you will, your acumen, what you look for.
Yeah, well, I'm a stock market junkie, self-professed. I love everything that has to do with the markets. I sold research to hedge funds and mutual funds for 20 plus years. I love to write and talk and do podcasts like this with you. I wrote and had a product on TheStreet Pro for a while called TheStreet Smarts. I did a stint as the editor-in-chief for TheStreet. I just love everything that's markets. And just thrilled to be able to sit here today and talk to you about what we're thinking in the markets now and see what stocks are doing what and where we could be going.
Well, there is no shortage of things to talk about, Todd. But before we get to that, let's just kind of get folks a little more familiar with you, right? There's a lot of different investment styles. Some folks are more technical, some are more fundamental, some are a mixture. Some are short-term, long-term. Tell us about your investing style.
Well, like many people who are probably listening, I think I've tried every single investment style known to mankind, with mixed results, and all of that has been part of a journey for me that has brought me to something I guess I'd call opportunistic buy and hold.
Okay.
So I tried my hand at day trading, and I found, like many people do, that day trading is great and can be horrible.
Yeah, it's funny. The one thing I will share with folks is that a lot of people probably think that we're sitting there watching every little tick and tack of the market. And I learned a long time ago that, checking in throughout the day is smart, but sitting there and staring at it, it can drive you crazy.
You see things that aren't there.
Correct.
This is just me. Maybe there are listeners out there that are just crushing it and have been for a long time. I've known a lot of professional investors, and anybody who has been a very successful day trader has done so for very short periods of time. So they're very successful, and eventually they burn out or they wash out. And it's just, it's a risky game. And I think that's more, I don't want to say that's more akin to the gambling aspect, but it's kind of a little bit more to the gambling aspect. I don't know.
I would say that there are folks out there, and I'm not judging, right? I think there are folks out there that like the juice that they get from that. I would say I'm much more like yourself, that I like to sit back, collect data, do the detective work, if you will, and make what I like to say, an increasingly well-hedged move. That's what I would say.
Yeah, I think that's smart. I like to sort of tilt depending on what risk reward shows. So, I look at Warren Buffett, right? I mean, why not just follow in Warren Buffett's footsteps, right? And I'm not talking about, hey, I'm going to go buy, a railroad and own it for 50 years. I'm talking about Berkshire Hathaway portfolio and the way he approaches it. He goes into these things, buys them at prices that he thinks is fair, where he's going to have, solid risk reward. He's going to make some money. But he is ruthless. Like, if he buys something and his mind changes, that stock has gone from Berkshire Hathaway's portfolio within a quarter or two, or however quickly he can unwind it, depending on how much he bought.
But his timetable, though, is extremely long. So getting back to where you say opportunistic buy, I think folks who are watching this can kind of wrap their head around that. But when you say hold, what's your time horizon?
So I have all my stocks in two buckets: forever and rental. So forever, quote unquote, stock would be one where I have no timetable to sell it. So, for example, I've owned Nvidia since 2017. I bought Nvidia, so I'm up 2,500% or some
You've
crazy.
done well. You've done well, Todd.
And I bought it because of I believe that their GPUs were better than AMD's and anybody else's, and I believe that GPUs were the best solution for gaming and for crypto. That was my original thesis, right? That they were
Right.
going to enjoy revenue strength and profit growth off of that. Because I do believe that stocks follow earnings over time. They just don't do it in a straight line, up or down.
Correct.
So, that was the thesis originally. So the thesis has changed, obviously, as the market has changed, as NVIDIA's business has changed. But there was really no reason for me to wholesale sell it. Now,
Mm-hmm.
does that mean that I've never tweaked my exposure to it? No, of course. Of course I have. I've paired it off when I felt like I needed to, and I've added to it when I felt like I could, and I could make some money, including in early April.
You just headed my question off, because that has been a very volatile time. A lot of questions about AI capital spending, data center spending. Now that we're coming out of that with earnings, I think people are a little more comfortable with that. We've had Amazon, Alphabet, Meta upsize its guidance, while those others have reaffirmed their capital spending guidance. But what led you to decide to add to Nvidia during April?
Whenever the market gets significantly, I believe most stocks will follow the market,
Mm-hmm.
right? So when you get these major turning points, either the stock market itself goes parabolic, or you get this very, very steep sell-off, and you get, RSIs were below 30 on the S&P.
Mm-hmm.
You had all
Mm-hmm.
sorts of sentiment indicators on the stock market that were telling you, oh my God, the world is going to end. Whenever that happens, I've found that, and you don't go crazy here, folks. Don't like bet the farm. These are not buy on margin bets,
Right.
right? It is like, okay, well, why not buy X amount of shares here on sale? And over time, that strategy has worked out. So, for example, I bought shares in Nvidia on April 4th. Did I get the bottom? No, I didn't get the bottom, right? Did I make money on it? Yeah, I think I'm up like 20% on that basket of shares, right? I also, though, did the first, this breaking news, right? I did the first major sale of my Nvidia position since 2017. Too soon, but middle of the month. And I
Okay.
actually cut my exposure to it by about 50%. It's still my largest position, but now it's
Mm-hmm.
only about 6.5% of my portfolio. I like
Right.
to
So,
own a lot of stocks, Chris.
so I will share that the pro portfolio, around the time you bought Nvidia, we picked up more shares of Marvell. So similar thought process with the RSIs and the market. And then about a week to 10 days later, we bought more stocks, about six, shares of six other positions. So did we buy big? No, we did not go, as they say, chips in. We did more, prudent nibbling is what I would call it. But what I'm curious here, Todd, is why did you sell the Nvidia when you did in April?
Uh, I am very concerned about my exposure when I think that the market risk becomes extremely uncertain. Because again, a stock like Nvidia, that represented a fairly large portion of my portfolio. I think it was 15 to 20%, which for me is
Hmm.
massive. Um, I didn't want to take the chance that that thing was going to roll over and really bury me. And my feeling was that if the market does decide that it's going to double top up here, now that it's hitting some resistance, roll back down, which is kind of what I'm thinking. I'm thinking that's a potentially likely outcome. I mean, there's a lot of work for the market to do. I'm sure we can talk more about that.
Oh, and
Um,
we will. Don't worry.
yeah, so for me, it was more of a risk management move.
So you
Um,
were being prudent, right? It
I
was
was
your
being
biggest position, probably got outsized relative to others, took some chips off the table, as people like to say, rang the register, that sort of thing.
Yeah, I made some fast money on that April 4th buy. So I took that off, and I took off, a good chunk of, like I said, I've reduced that position by about 50% from what it was. Still, a massive position for me at
Right.
6.5%. So it's not like I'm thinking that the wheels are off the bus on that stock. But I think that it's prudent when things become incredibly uncertain to play a little bit of defense and play a little protection. And you might say, well, Todd, you sold. Chris, I have more cash now. I think I'm at 40%, which
Wow.
again is massive for me. Probably the most cash since 2022.
All right,
Um,
Todd, stop. Let me use a word that I hate to use. Let's unpack that real quick. Okay. So you sold Nvidia. Did you sell anything else? And
yes.
what I'm trying to get at is between when the market bottomed out in early April and we've had this nice run in the balance of April and last week as we started off May, were you getting a little concerned as we started to hit these resistance levels? If memory serves, we blew through the 50-day on the S&P 500. You're staring down the 100, the 200. There's a lot of hopium in the market about what trade deals could bring. Is that kind of why you raised your cash levels back up?
Yeah. Yeah.
Okay.
100%. 100%. And I did. I sold a lot of things that I haven't touched in many, many years.
Okay.
Most of them were reductions in exposure. Most of them.
So
There
you didn't
were,
cash out of anything.
there were a few stocks that I would consider rentals that weren't
Okay.
part of
Now,
my forever portfolio, but yeah.
all right. Now let's talk about that because you said that you're more long term active, buy and hold, opportunistic buy and hold. I think were your words, but rentals to me is couple days, short term. A, is that right? And then B, how do you identify these things?
So for me, rentals is longer than that. I go into it with a position trading mindset that maybe I'll own it for 3 to 9 months, something like that. But if I make a lot of money in a week, I'll be gone. If I lose a lot of money in a week, I'll be gone.
Right, right.
So for me, it's that's not a hard and fast ownership rule either for a forever or a rental stock. It's more of a mindset. So
Okay.
for a rental, for me, it's like, okay, there's some sort of development that I think is going to be a catalyst that's going to cause this thing to go up. But it's not necessarily something that deserves a full-time position in my portfolio.
Okay.
It was
Okay.
like a part-time worker. One stock, for example, that I sold out of entirely, I made a lot of money on, was SoundHound. SoundHound was an AI company. They did things like AI for the drive-through at your local restaurant.
Oh,
Right,
yeah.
right.
I remember a different company doing that, and they did not do so well. But
Yeah.
that's okay.
So SoundHound was quite a hot stock. I felt like we were at a point in the AI cycle where people were going to start looking beyond Nvidia for other ideas.
Hmm.
That proved to be correct. The stock made a really nice move up, but it's not something that I wanted to own forever. And given the market uncertainty right now, doesn't really deserve a spot in my portfolio. Doesn't mean I might not consider it again, but you have to go through and pick these. You can't be emotionally attached to these things.
No, oh no, no, no. You're just looking to put capital to work in opportunities, right? And your rentals, it's kind of it sounds to me like it's something that you would um, like to have in your portfolio. You think it's going to go higher, but you're by no means wed to it, right? This is not part of your core position.
Correct. I have one wife, been married to her for a long time. I'm not going to marry any stocks or anything else.
I'm not Todd. I'm not really sure that analogy holds between core holding and rentals, but we'll you know what we'll let the pro members below in the comments section give you some grief on that. Let's what do you say we move on because I want to get your thoughts here as the market has rebounded, and we both agree that it is staring down some resistance levels now. Pro contributor Bob Lang a while back said that the market would really need to retest its April lows. Now, we will see if that happens, but I kind of want to flip the conversation a little bit and say, as you look forward, we still have more earnings to go. We'll talk about it, trade deals, the Fed is coming up. What do you think it's going to take to push the market through those resistance levels? And here's the key on a sustained basis.
Yeah, everybody hopes that it's going to be trade deals, but the market has a way of frustrating the masses, and I think that a lot of people believe that we're going to come up with these trade deals, and that's going to be what causes the market to soar to new highs. I don't know if that's going to happen or not, right? I mean, nobody knows what's going to happen in the future and how people will react to it. Well, I will say is I feel like a lot of the fear that was built into the market in early April
Hmm.
has been resolved. You're not
Agreed.
nearly
Agreed.
Yeah, you're not nearly as dealing
Well,
with.
even Trump is saying, "Oh, at some point I'm going to have to roll back these, tariffs on China at 145%." But what I love about it is then he says, "We're going to tariff the movie industry as well." So he's got this like, "I'll give you a little bit, but then I'm going to take this back." It's this constant uncertainty, and what I thought was funny today, Treasury Secretary Bessent called it strategic uncertainty.
Yeah, strategic. I saw that quote and thought it was kind of a brilliant quote. I think that we have to remember is that even if you negotiate trade deals, you're still talking about tariffs that weren't
Oh,
there.
well, yeah. All you're doing is moving the dial
Yeah,
up or down.
right. So we don't know what that impact will. We know that tariffs historically are inflationary in the short term and deflationary in the long term. And I think that's why, he's so mad at Powell because he knows he needs Powell to cut rates.
Yeah. Well, that's look. I agree with you that he's going to need that because, as we're seeing in some of the data, the economy is slowing, but not as much as people feared. But the inflation numbers are clearly marching higher. It doesn't give the Fed a lot of room to do anything.
No, the Fed isn't in a rock and a hard place, Chris.
Yeah.
This could very well be, and Powell even admitted it last month when he was in a speech. He said that the dynamic, they may be more in tension than normal, whatever, right? You've got the dual mandate, low
Yep.
unemployment, low inflation, and the two often work contrary to each other, right?
Yes.
If you raise rates, right, you can lower inflation, but you'll cause job loss. If you cut rates, you cause inflation, but you increase inflation, but so you get the idea.
Yeah, I do. I do.
It's this rock and a hard place. It's a
Yeah. Yeah.
tightrope that they have to walk, and there's really no incentive for Powell to go out on a limb and say, "Yeah, I'm going to cut rates," because if you get this inflationary spike, it is going to cause a re-ratcheting, a rethinking of spending. And then you could end up with deflation. And at the same time, and unemployment, has risen from 3.4 in
Hmm.
2023 to 4.2 now. You've got Challenger Grain Christmas's layoff numbers are, if you back out 2020, the layoffs are as high as they were in 2000. You have to go back to 2009.
And we haven't seen those flow through the employment data yet.
No, and one of the things that we have to always remember is that there are lagging indicators and there are leading indicators,
Yes.
right? So, the lagging indicators, everything's still okay. I mean, sure, GDP in the first quarter was the advanced estimates negative, right? But of course, there's all sorts of people who were pulling forward imports because of
Hmm.
the
Hmm.
unexpected tariffs. You had a surge in gold. Nobody really talks about that. You had the surge in gold activity that affected
Hmm.
GDP numbers as well. You back all that stuff out, and you're still talking 2 to 3% GDP.
Well,
But that's historical. It's rear
yeah,
window
but
stuff.
right. So I haven't paid a lot of attention. I shouldn't say I haven't paid a lot of attention. I haven't weighted it in my thinking as much because it's kind of like BCAD, right? It's kind of like before tariffs, after tariffs, right? So to me, the data that we get in April is going to be a lot more important, and that's really what stood out to me. Yeah, we saw the prices components in the April ISM data jump higher. We knew that was going to happen. But I think what really surprised me was the uptick in new order activity in the April services PMI. I think a lot of people are expecting that to ratchet down and point to the economy slowing, not perking up compared to April.
Yeah, I don't know how to interpret that, Chris. Do you have any? I don't. It's
Well,
not something I've spent a lot of time thinking about.
I'm going to say it like this: that for folks who are thinking the Fed's going to deliver 3 to 4 rate cuts in the back half of the year, come this afternoon when Fed Chair Powell gives his comments, do not expect him to support that line of thinking. Really the two big jumps in ISM manufacturing services prices. There's no way that he can deliver on that. And the economy between that services PMI number and the April employment report, like you just said, Todd, 2% plus on GDP.
Yeah, and you look at those ISM numbers. Okay, so I'm a little concerned about manufacturing, right?
Yeah.
But manufacturers struggled for a long time, and we all know that, right? But
But so here's the thing. Manufacturing is what percent of GDP? 10%, 15%, maybe? So it's all on the services sector.
Yeah, and the services sector is not, it's not horrible, right? It's above 50 on both the S&P and
Still
on the
growing,
S&M. So it's still an expansionary, but it
right?
is retreating. And I think one of the
Yeah,
things that people have to remember is this is a rate of change game.
right.
You know, you got to think about what the rate of change is. The rate of change accelerating or is it declining? So I think that, and then you can't just think 1 month is not a trend. This applies to
Totally
stock,
agree.
right?
Totally agree.
So you have to say to yourself, well, are we really making progress? So you can
So
look at inflation and say, yeah, inflation's down from 3 months ago, but it's flat to where it was last September. I mean, there are so
yeah.
many things.
So here's the big conundrum, right, with the services number. Okay. So the April print was below the first quarter average. So you would say, oh, slower, to your point, a slower rate of change. Yet that new order number for April above the first quarter average. And I'm sitting there scratching my head going, okay, what is going on to drive this?
Could they, and again, I don't, you know better than me on this. Could companies be adding more orders to try and shore up supply later on, assuming that because we're going to have this supply chain Armageddon again with the port of Los Angeles?
I think that's a good point. I think there is some of that. I think people were expecting to see, that in March, the pull forward, right? But then over the last few weeks, what have we heard from, or seen, I should say, in port data? What have we heard from air freight handlers, right? Orders are falling. Get ready to get hit in May. So that does stand to reason that we might have seen some pull forward in orders. But we won't really be able to confirm that, unfortunately, until we get the May data, which means about 4 weeks from now. So,
yeah. And the other thing we haven't even talked about here, Chris, is consumer confidence. I mean, that's another leading indicator that's in the toilet.
Oh, 100%. 100%. And it has me bracing for what retailers are going to say. Think of the two things that we just, pieced together, right? Supply coming from overseas and are consumers willing to open their wallets and buy? So you look at the results we're going to get, Macy's, Kohl's, Dick's, you name it. I'm a little concerned that those numbers are going to be, let's just say, coming up short.
I'm not sure if we'll see that yet. I'm not sure. It'll be interesting to see what they say and what their guidance is and what their forecast is. The only reason I'm not sure we're going to see that yet is because real wages are still positive. So people are still growing their income faster than inflation. And typically speaking, that's good for households, right? And it's good for household spending. If that flipped the other way, like it did back in 2022, well then, look out below, right? But so if you look at the expectations index, right, of the Conference Board and University of Michigan, pick one, doesn't matter which one you look at, the inflation expectations have skyrocketed.
Yes.
To the highest since like 2011. In one of them, it's even longer than that. And I think one of the things that we have to remember is that weighs on people's spending decisions. So it may not be affecting how much they spend at Macy's this month or last month, but it certainly may be weighing on their decision on whether or not to repair their roof or get new siding or go out and buy themselves a new motorcycle, or some of these decisions I think are going to get put off, especially the larger
durable goods. Todd, that what you're saying? Durable goods?
Yeah, discretionary purchases that are very expensive, and some of these durable goods, if you can still make it work for now. So I'm concerned about that, but I'm also concerned about corporate spending, because the tariff scheme, regime, whatever you want to call it, is incredibly frustrating to business owners.
Are you referring to the uncertainty around all the numbers and the shifting numbers, trade deals, no trade deals, or something else?
How do you plan for that?
You can't. That's
exactly.
That's why if you look at the NFIB Small Business Index, the uncertainty component is at record levels because they don't know what to do.
No, you can't have a sit down and figure out a plan for where you want to build. Do you want to build so you don't want to build in China. You don't want a factory in China anymore.
Right.
Fine. So where do you build it? I guess the U.S. is where they want to build
Oh,
it.
that's what the goal is, right?
But I mean, are you going to look at India? Are you going to look somewhere else? You don't know what you don't know what those trade deals are going to be like.
That's
So
correct.
you've got to
So,
press pause on everything because you
well, but
need to know what the
so
numbers are so you can run the math.
I agree with you, but I think if you look at what Apple did and how they said on their earnings call, last week, that China is going to serve for iPhone production all the markets outside the U.S. For the U.S., it's going to be India. Why? Well, odds are those tariff numbers are going to be way less than whatever China's are. So it's an educated guess, I would argue.
Yeah. And I mean, educated guessing is not necessarily the way that a lot of businesses want to run their businesses.
No, no, I understand that.
And I think that, yes, some companies are going to spend X amount, but are they going to ramp up their spending, or are they going to tap the brakes a little bit on their spending? And I think they're going to tap the brakes on the spending until they have some clarity. So,
100%.
yeah, you'll get people who will say, I'm going to build this or I'm going to do that. Well, they would do that anyways, right? I mean, you have to keep the lights on,
Well,
right? You have to keep your business.
they're going to, I think what you're saying is they are going to spend where they have to spend,
Yes.
right? They're not going to necessarily spend on large capital plans because of the uncertainty in and around things. So, like if you look at like the big tech guys, right? Amazon, Meta, Microsoft, Google, they are still capacity constrained for cloud and data center. They have to spend. In some cases, they're spending very big, but they have to spend to add that capacity. So,
I'm going to go back to my rate of change argument there too, though.
Go ahead.
What's the rate of change in
for the
CapEx?
So CapEx, when you say that, if you look at Meta, they boosted their CapEx, but they're not. Are you saying they're not boosting it as much as they had in the past?
Correct. So you're seeing sequential and year-over-year growth is going to decline in the amount that these companies are investing into these things, right? So
Yeah.
That's when you put on let's put on our Wayback Machine hats, right, Chris? I mean, because you and I, we were both, we don't like to admit it, but we were both, front row participants in the internet boom and bust.
Oh, you're going to touch on one of my concerns about this whole AI build out, which is at some point, capacity demand outstrips available capacity, right?
Yeah, I mean, look at Cisco. I mean, and this is where you get back to the stock argument too, right? So, Cisco rallied up to these crazy levels in 1999, right? Did the internet fall apart? Did the internet not become awesome and fantastic and everything that we expected the internet to be? Of course it did. But Cisco never got back to that 1999 high, did it?
No. So my concern on this is that, and this speaks a little bit to what we saw back then, right? Which was there was this build out in capacity, right? Back for the internet days of all the promise the internet was going to bring and all these new business models and everything that we were, hoping to see. I guess that's where hopium for me originated. And did we see all those companies succeed? No. By definition, they could not. So the amount of companies expected to tap all that capacity fell short. And could we see that this time around again? I think it's possible. I don't think we're there yet, but it is possible.
Yeah, let's and again, that's why I still have, Nvidia is still my largest position, but
correct.
At the end of the day, I still look at Nvidia and I say semiconductors are a commodity. It's a cyclical. Semiconductors are cyclical. So it depends on where you are in the cycle.
Correct. 100%. 100%. If we start seeing capacity slowdowns on a sustained basis, not a temporary lull, then you've got to revisit what you own. But Todd, this is all part of not being what I call a crockpot investor, right? There is no fix it, forget it. Or to your point, you need to be, an opportunistic and active buyer. I think of it more as an active investor, meaning we're constantly poring over the data, updating our expectations, our assumptions, and making calls as we need to.
One of the things that whenever we have discussions like this, or I have discussions on this kind of subject, one of the things I always point out is that, people say, well, the S&P 500, buy and hold, right? But the constituents in the S&P 500 are changing, right? So
yes.
Just like,
and to be fair, it's not just the 500.
Right. So, I mean, it's not like so what happens with the S&P 500 is that the companies that get small and are out of favor get tossed out of it, and the companies that are rising and going into favor get added to it, right? And you look at Buffett's portfolio, and if you look at Berkshire Hathaway's portfolio, the things where he thinks he's going to make money, he buys them, and he buys a lot of them.
Yep.
And when he's wrong, or if it's a rental, like he goes in and out of energy stocks the last 15 years, oh, I'll buy some. No, I'm going to sell them. I'm going to go to airlines. Oh, I'm going to buy them. I'm going to sell them, So, I think that you make a great point. Active investor, opportunistic, buy and hold, whatever. I think that you just have, there's just so, if you just bet on 1999 names being the ones you can how did that work out?
How many of those 1990 names are still around? That's the question.
Yeah, not many. And even those that are like Intel, have those been the stocks that you would have wanted to own over the last?
No. I mean, it's very rare that you find companies that are able to bob, weave, and alter their business and evolve over time. I mean, for every iPhone, there were how many other devices that people had at one point, right?
Yeah, and go back even further, and I mean, what are you going to have a Polaroid and IBM in your portfolio?
Todd, I don't know about you, but Polaroids are making their way back as a party favor. So you never know. You never know. All right, let's talk about some companies that are reporting later this week. We've got Molson Kors. I'm watching this, Todd, not so much because of beer consumption, but I am very curious about what they have to say about tariffs. What do you think?
I think that. Well, I'm more worried about other places like Constellation because of Corona than I am, say, domestic oriented. I think that everybody is going to have to be thinking about tariffs and thinking about how our tariffs are going to impact their businesses. And one of the things that we always have to remember is that even when it comes to a pencil, there are so many pieces of a pencil that depend upon the foreign but depend on imports. It was funny. Elon Musk actually did like a whole video on
really
supply chain and pencils. But yeah, there are so many things that we may assume is just like look at the U.S. auto industry, right? And I'm getting away.
Oh, yeah. No, that's an important one.
All of these things have inputs that are coming from all over the world.
Correct.
Right? So all of these companies, Kors included, is going to be thinking about, okay, what does this mean for my business, and how is this going to increase my supply costs, and then how much of that am I going to be able to pass along to my consumer? And because those are your two choices, right? No, China is not paying for the tariffs, right? The tariffs are either going to be paid through the consumer, or it's going to be paid through.
You're throwing shade at the External Revenue Service.
It's either going to be paid through inflation or it's going to be paid through a decline in profit margin. That's how tariffs get paid for. So, that's why I think that, all of these companies are going to have to they're either going to have to be able to squeeze their own suppliers to make up the difference to some extent,
or
absorb some of it themselves, or raise the prices.
And we're starting to see more companies talk about price increases. We saw that the last 2 weeks, really from the CPG or consumer product companies. And I suspect we'll see more of that. That will be something to listen to. One other company that's reporting that I think is going to be kind of telling, not only about tariffs, but about the consumer, is going to be Tapestry. I'm kind of curious to see, because we are seeing declines in international travelers to the U.S. What could that mean for some of the luxury good companies here? And I wouldn't put Tapestry on the same banner as LVMH and some others. It's definitely a higher end product. So I'm going to be very curious to what they say about demand.
They're actually, I think they've got a slight problem on their hand, because you get your uber wealthy who they don't care. They just spend the money. They want something, they'll just buy it, right? But then you have the aspirational wealthy. So,
and that's where they're going to get hit.
Yeah. So you look at Silicon Valley. What has happened to jobs in Silicon Valley in the last year? According to Challenger Gray and Christmas, they're down. I think it's like 35%. Layoffs are up 35% in technology over the last year, right? What's another high income group of workers, federal government. Well, federal government
What?
employees, six-figure
What?
salaries. So you're not talking about unemployment at the service sector level yet. You still need people to, do those important jobs. That's not where the layoffs that are going to hurt the aspirational buyer of
Mm-hmm.
Tapestry's products, right? It's going to be your six-figure incomes. So think about where those six-figure incomes
Right.
are and what's going on. Are those jobs growing? Are those people who are working in those jobs, do they feel better or worse about whether they'll still have those jobs in 1 year?
Yeah.
And if you look at those going back to the consumer confidence data. So if you look at the consumer confidence data, they're more worried about their job security, and they think that inflation is going to go significantly higher. That's not a recipe for going out and buying a new luxury product.
Right. So, I mean, at the margin, then it sounds like you're a little concerned about discretionary spending, right? Whether it's certain retailers, certain restaurant companies, right?
Absolutely. Absolutely. Now, does that mean that this is going to be an economic reckoning and that we're destined to recession? No, right? Economists have forecasted 9 of the last 5 recessions or however.
Yeah.
Blah, 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 right? So you can look at all this data and say, it's concerning. It's something that raises eyebrows. Not necessarily destiny, but something that should make you think.
But I think it also gets back to something you said earlier when we were talking about certain pieces of economic data. It's the rate of change in spend, right? In this case, the rate of change is probably to the downside, right? The vector velocity. The vector is down. The velocity of that moving down is probably growing. So, that gets back to what I said earlier, that I'm a little concerned that these companies, as they report in the coming weeks, retailers, restaurants, that, their guidance is likely to be lower than expected.
Yeah. I mean, this is, the markets rely on confidence, right? And the confidence is dependent upon, do I believe revenue is going to grow more or less? Do I believe profit is going to grow more or less? And if you think revenues are going significantly higher and you think earnings are going significantly higher, then yeah, I am going to go out and I'm going to overweight stocks, and my 60-40 portfolio is going to become an 80-20 or whatever, right? But then when you get the opposite of that, then you look at your portfolio and say, the 10-year treasury is yielding 4.35 or whatever that happens to be today. That's actually pretty competitive. Maybe I don't need to go out and take on the risk. And what was it, Doug Cass back in 2022 so accurately saying, treasuries are the alternative. And I'm not saying that we're there again, but I think we always have to keep an eye on these things because, this stuff doesn't happen in a vacuum, right?
No, it doesn't. It doesn't. All right, Todd, let's move on. I want to answer some pro member questions. We've got a handful of them, kind of rapid fire if we can. Here we go. Todd, how do you balance fundamentals versus technicals in your investing?
I want to own growth companies, but I also want to own companies that are above their 200-day moving average. That's probably the best way to describe it. So I want to see revenue growth forward, or I want to see so the last 4 quarters, I want to see the revenue growth growing as a percentage terms. So think in terms of 4 quarters ago, up 10, up 15, up 20, and then up 20.
So an uptrend in the trailing revenue.
Correct. And I do the same thing with earnings. I want to say I will buy a stock that doesn't have earnings yet as long as I can map out a pathway to profitability. But ideally, again, I want to see the change sequentially growing quarter after quarter, year over year. I want to see that growth. I also want to buy stocks that, have tailwinds behind them, where other people are also buying them. Now, some people will say, no, just buy them at their lows. Nobody can buy them at their lows. I mean,
you're lucky. You're lucky if you do. It's the exception.
Right.
But when you say tailwinds, though, I just want to just call this out, because for me, tailwinds are that kind of intersection of economics, demographics, structural change type of tailwinds. You're defining it as something a little different. You just said if people are in buying.
Yeah. I want more buyers than sellers.
So you want rising. So if someone's tracking this, you're saying rising volume, trading volume.
Rising stock price on rising volume. Absolutely. 100%. Yeah.
Okay. All
So
right.
that's how I balance the two. So then I'll do all sorts of other funky things. I'll look to see, okay, the stock is the stock now 70 or 80% above its 200-day moving average? Well, that would scare me, right? I would think that we're going to get a little bit of a pullback, and then,
Mhm.
okay, did it get to the 50-day and bounce off the 50-day? If I still like it and I like the fundamentals, I like the macroeconomic backdrop, I think the stock market has got, is heading in the right direction, then yeah, I'll buy it off of the bounce, right? Same thing with the 200-day. So
Okay.
that's how I balance the two. I want to have growth companies, but I want to buy them at the times where I think I have the best opportunity for upside.
All right. So a nice mixture. There is no silver bullet.
Correct.
Okay. Todd, next question. Do you see, let's look at back to what we were talking about, some of the economic data. I'm going to tweak it just a little bit, give you an or in here. Todd, do you see a recession on the horizon or stagflation? I added the stagflation part.
I think that we are entering stagflation. Uh, how deep does stagflation go? I don't know.
Okay.
Is a recession possible? I think yes. Is it likely? I don't know. I mean, now you're getting into the
So
okay.
let's peel the onion on this just real quickly, right? So the way I think about it is you've always got to take a look at the various possibilities that are out there and you weigh them, right? What's the probability of this versus this? And you refine that as you get more data. So I'm going to put words in your mouth, Todd Campbell. You're saying that based on the data that you're seeing now, that it looks like stagflation is where we might be. We might get into a recession. We're not seeing enough data to really say that yet. But at the same time, if we see the economic data pick up, we could simply be back to not stagflation, but decent growth, but suffering in the near term with higher inflation.
Oh, that is fair. That's the reason I got 40% of my money in cash.
All right, fair enough. Fair enough. Oh, this is an interesting one. Okay, so one pro member wants to know, Todd Campbell, options. Do you use them? If so, how?
Options. Oh man. So
The answer could be no.
I danced with the beast in the early 2000s. I
Hmm.
used options. I built up an options account from basically nothing to a very large sum that I probably then handed all back. And I think options, you really have to be careful and keep them to a very manageable part of your portfolio, because I think you can lose a lot of money fast. You can make a lot of money fast, and you can lose a lot of money fast. And I think that the best way to use options, and I know other guests will disagree, but maybe it's one of those things where when you do get really, 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 really oversold, you buy some
Hmm.
leaps on some things. But again, you're not doing, so you're going 1 year out. You're not going out of the money ones that are going to make you the most money and they expire in 3 weeks. I tried that. One of the biggest mistakes of my investing career was basically doing a Hail Mary pass. It didn't work out. No.
All right. All right. Well, that transitions to our last question. Maybe you just answered it. Todd, what is the biggest investing mistake you've made? And what's the biggest learning that you walked away with?
Well, I used to think that leverage was my friend. And then
And hang on. So leverage meaning using the margin.
yes. So I
Okay.
used to think that leverage in any format. So okay, using margin, basically borrowing money from my broker to buy stocks, right?
Okay.
Um, so that'd be going to your margin account. And I used to think that options, which is another form of leverage in my view, so I used to like leverage until I
All
didn't.
right.
And the biggest mistake that I ever made was I built up that options account to a fairly large sum. I was taking it on the chin left and right, during the I want to say it was pull back at early 2000s, and there were names like Lycos, and anyways, there was
Yeah.
those.
Oh, I remember. I
Remember
that
Lycos?
was a former search engine company, wasn't it?
Yeah. So there are all these things that you're making money on that soon I became losing money on, and I got down to a certain number, and I was just like, I hit a I don't know, I give up stage, and
You hit the Kenny Rogers moment.
Yeah, and I just said, I'm putting all my chips in on these options on a company called Transwitch that that went to zero and wiped that account fully out. And it was just, in a way, I'm glad that I did it relatively early on in my career,
Hmm.
so
Hmm.
that, those numbers really, I mean, they were big numbers to me at the time, but now I look at those numbers and I think of it as a nice tuition to a school. And that tuition, that tuition
Yeah, no, I
check
understand.
that you write.
I'm sorry. I'm sorry. You're not saying it was the size of a tuition payment. You're
Well,
saying that it was what you paid to learn.
both, but yeah,
Okay.
I
All
mean,
right.
and I think that we have to remember that you're what's the definition of insanity is failing to learn from mistakes, right? And continue to do the thing over and over and over again, expecting a different outcome. So
Right.
I don't use margin anymore. I don't use options anymore. Why? It didn't. It's just not. My brain doesn't work that way, and the pain that I felt wasn't worth. How's to say? The juice wasn't worth the squeeze for me.
Right. 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 Oh, excellent. That is a great way to finish that, Todd. And thank you for taking those member questions. And folks, remember, if you want to have your question asked and answered on the podcast, you have to be a Street Pro member. All right, Todd. Final thoughts before we get out of here. Anything you'd like to share?
No, I think that find the way of investing that works for you and for your mindset. Don't allow your emotions to dictate your choices, right? And it's okay to feel like you're missing something. Don't be afraid, oh, I'm going to miss out on something, right?
Hmm.
So, I just, like I said, I'm at 40% cash, right? I would have made more money if I hadn't been at 40% cash after the last week and a half, right? But at the same time, the 60% that I have, I'm still up 9% for the quarter. So am I going to complain about being 9% up at the quarter? I'm up 6% in the past month.
Nope.
Market's up flat. So am I going to complain about having a 40% cash? No, no. So I think that, just manage your money wisely. Try not to get too whipsawed around by your emotions, and try to find an investment style that matches your mindset.
All very sound advice, Todd. Why am I not surprised? Yeah, so, Todd, thank you for catching up with us today. I look forward to having you back on, and I also look forward to sharing our conversations when we bring a third-party guest in, whether it's someone else to talk about the market. We can both kind of Q&A them, so to speak, or whether it's a management team or something like that. So thank you for joining. And folks, that is a wrap on this week's Stocks and Market podcast. Thanks for tuning in. Pro members, comment and like in the comment section below. And the same goes if you're watching this on YouTube. Give a thumbs up, give a comment. We'd appreciate it. And folks, we'll be back before you know it.